Okay guys, is it worth trading a small account? Well, let's have a chat.
Matron, take them away.
And a warm welcome to one and all. First time here, big fella Scruff. Trying to put trading in the real world. Or at least I hope so. And today really is. Because while I'm having a cup of coffee, because trust me, Scruffy needs a coffee. And I say need, not like today, because I am knackered. And I'm going to highlight that in my journal as well. Because I am really tired at the moment. But it's true. We all know Scruffy likes a coffee. But he likes the charts as well. And the chart is really just a vehicle to let your money work for you. Now, too many people think the charts are there almost like a video game. And that video game gives you prizes. And the more you do, the more you get. Actually, no. Less is more. The less you do, the more you get. You'll often find that you can go trading for years and you think you're doing okay. But really, you're just spinning wheels and going nowhere because you are playing at it. Now, it's wonderful to have a big account. In fact, it's really wonderful to have a big account. And you can have it through the prop industry and one thing and another. But do you really have a big account? Case in point, I trade with the fivers, have done for 2 years. They've paid me quite well, and I've been putting that money into investment accounts. With Vanguard. I used to have them elsewhere, but started moving everything over. And I do a self-invested pension. And I use that money for that. So I put a fixed amount between £700 and £1,000 a month into this account from the profits that I make. So I'm making my money work for me. And you'll kind of see how well that's grown. Now, everything has to have humble beginnings. So what I did for the guys, and if I just pull this over and I kind of pull up the sheets. Actually, Rhino did really well with this morning. We did a Zoom call this morning and I let him break it down and it's gone to the top of the barrier that we were discussing. So well done, kid. We had a few bumps in the road, but we got there in the end. I was really pleased with the way he spoke. So happy days with that. But what I'm looking for is this. This is small success. Now, this is our Discord. We all have a little bit of a chat and rattle on about whatever it is they're looking at. But we set up this, which is called small success. Now, this is for all of the guys to basically talk and see what they're up to with small accounts, put their figures in and how they're coping, etc., blah, blah, blah. And the idea is, well, there we are. Kevin's got his back to £200 and he's grown it. Now, some people might sniff at that and go, well, it's only £8 growth. It's phenomenal on the size of the account. Now, let me explain that. Now, we're doing it with BlackBull, which is this. And I'll show you the one that we set up. We started it on the 8th of January. And we kind of put £200 each into a broker. And the broker of choice was BlackBull. And if you want to follow the journey, there's links for it in the comments and description. And you'll get various bits and pieces from them. But mainly because it has a vast amount of products. And it has the leverage to back it up. Now, it's the leverage I want to talk about. Because BlackBull has 500 to 1 leverage at this moment in time, which allows us to trade pretty much any asset we want. So if you want to trade the DAX, you can trade the DAX, but you've got to be careful with the position size. And this is where the prop industry falls down. When you have a big account, sort of a 200, 300, a million even, that's just buying power. The drawdown is the account. So you are essentially trading a small account. So the idea of this was to put the money into our own brokerage and then you control it. You do everything. You haven't got any rules to worry about. Everything is on your shoulders and we'll build this up. So on the 8th, This is now at 243.95. Again, people might sniff, and I've got my last position running in here. I might actually close it out for the day. What I'm going to do is I'm going to just drag this down onto there. You never know, it might play out while we're on, but I'm looking to kill this out. I was going to run it all day, but I am knackered, and I'm going to explain. And I made mistakes, and I made mistakes yesterday, and I made them today, and I need to step out of it. Now, today I've done £3.89 on the account, and after commissions and etc. Swaps, blah blah blah, it's £2.40. But now let me show you something. I made mistakes, but I was sensible enough to kill those mistakes off bloody quick, because for all I have a high hit rate, I don't let it get out of hand. All right, and on something like this, I cannot let it get out of hand, because if I do, it'll damage the account. So if I pull in this is my journal, you'll see that this month, for all it's a short month, has a low hit rate, 75. That's why it's not green. It's below my 80% threshold. For me, what I'll find is as a personality trait, I like to have a high hit rate, but I also have a patience in my personality, which means I can trade A1 setups and wait for the right conditions, something we were discussing. Now in January, did quite well. Okay, I actually pulled in a return of 15%, which is phenomenal. Okay, went well over my target, and I was in pretty much of a good mood. This month is slightly different. I only targeted 5% because that's all I wanted for the growth. Because one, I was on holiday at the beginning of the month, and it's a short month. The rules stayed the same, but the assets changed slightly because we vote every month as to what assets we're looking at. Now, as you can see down here, I did make a number of mistakes, but I recognized I made mistakes. I was in early, and when the whole position was in profit, or I thought it was getting out of hand, I killed it off to protect the position. Okay. This saves the account, but the account is still growing. I don't need to do anything now. When that position closes off, I've achieved the target. It's crept over, so I'm happy. I'm happy with that. Okay. What am I driving at? Little acorns build into bigger acorns over a long period of time. Now, I told you earlier on that my prop and one thing and another went into an investment. Well, my investments is here. They're all going in, and I've got a return of 21% on that. And those small accounts over the last sort of 18 months, 2 years, 75,000. And that is just by chipping away and letting the money work for you. Now, how can you let the money work for you? Well, I'll kind of give you an example. If you've got 200 quid, you're not really going to be able to draw anything from it. Okay? You want to use that 200 quid as a vehicle to build up an account. So let's just say you can achieve 10% a month. Okay? But your £200 is allowing you to sort of learn the craft. So you're going to give yourself 12 months to learn the craft. Okay. So after a year at 10%, which it's not difficult, you're going to be left with 664 quid. And you think, 664 quid, that's nout. Yes, it is nout. But what you've now done is you've earned the right to trade, and you've created yourself a trading pot in the process. You know, you could take £164 out of that and give yourself a treat just for your work, completing your apprenticeship. And now you've got £500 that you can deal with. Okay, you've got £500. You'd still probably be able to do 10% a month. You'd probably be able to do a little bit more. But what that will give you is the ability to start putting money away in things like a Vanguard and stuff like that. Now, again, it doesn't sound much. But if you were feeding into this as well, now let's just say you're feeding into it £100 a month. Okay, additional deposits. Why? Because why not? You've earned the right to trade. You are now investing in yourself for a greater gain. So you do that for a year. Now you've got £4,000. £4,000. It's a lot of money. It's a lot of money. That £4,000 can now start giving you a significant growth. So you've spent 18 months, 2 years building up a skill set, and you're building up a pot of money in the background off your own efforts. Now, suddenly, this is starting to return massive amounts of money. But the moral of the story here is, it's not going to happen overnight. And you're not going to turn small money into big money very quickly. You've got to earn the right to do it. And you need to give yourself a good year, 18 months. Now, after that, if you've been sensible, little steps, boom, 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 the pot of money you have at the end of it comes two things. One, it's a reward for the hard work that you've put in. And it is hard work to get there. And secondly, it sets you up for all of your future investments, because that now becomes working capital. And working capital can be used, because what you could do is you could take that 4,000, break it in half, put 2,000 into the Vanguard and trade with 2,000. Now you should be able to turn £200 a month easily off £2,000, easily, and add it into the 2,000 that you put into the Vanguard. So actually, I'll just put that back just while it's in my mind. So from that point, you put £2,000 into a Vanguard, which is there. I've just shown you mine. Mine's got quite a good growth rate, but you could get 10% per year out of it. So it's 10% a year. So that's more than doable. But you're also going to put the £200 every month into it. And you're now going to run this for 10 years. Why 10 years? Because that's like an index time horizon. So what you're doing is, this future investment is now setting you up for later in life. Now, if you're a young kid and you started this at 18, you've got your 2,000 in at 20, and you're looking for something good at 30, that's your 10-year horizon. Now, for me, I'm 54. My 10-year horizon is building me up for something for when I come to retire. You know, I'm pretty much retired now, but when I retire fully, and I just don't want to be bothered, and I want lots of extra cruises, etc., I want a lump of money. Well, that's 10 years' time. I've now got 46 grand, well, just shy of £47,000 for doing next to sod all. That's making your money work for you guys. And it's how you can just use the power of compounding, but little steps over and over and over. Starting with a small account, build it up into some other kind of account. Use that account to build up again, then break it in half and feed an investment. That's the power of compounding. It was once called the eighth wonder of the world. Personally, I thought it was King Kong when I saw the film, but no, Einstein said it was the eighth wonder of the world. But that is a way to build a small account, but keep it realistic with a realizable goal and an end point. I hope that makes sense, because this channel is purely just to inspire you. That's all it's for. And somewhere down the line, I hope you have a light bulb moment. Maybe? No? Yes? Okay. I'll get me coat and go get my coffee. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.